I agree with what Ashwin said, that cash market trader is getting suffocated in the current environment where the entire ecosystem is so pro options. Imagine the recent margin call where 20% margin you have to keep if you have to buy something. Sure, someone must have done something bad and we had to go through this. But if the same person wants to say bet long on a particular company, he can buy the premium, which should be far lower than the 20% margin on the cash segment. So what has happened, people are gradually moving away from cash and getting into options, which, as you said when you started, every solution has a problem and the problem can be far bigger than what we perceive it to be. First of all, let me thank all of you for becoming part of this history. This is going to be first crowd face-to-face.
Thank you for this.
As you know that I believe in democratizing the access of knowledge, education, data, analytics, people, I thought this is an amazing audience which will help us not just to ask quality questions to you with respect to BSc, with respect to market microstructure, but also I think this audience is an apt audience to give us a lot of suggestions so that BSc as an exchange move to the next level of the trajectory. So before I start the interaction with Sir, let me introduce Sir to all of you. Mr. Sundararaman Ramamurthy is the MD and CEO of BSc. I had an opportunity to interact with him many years ago and constantly when he was part of NSC. And I can tell you one sharpest mind in NSC, which I used to regard a lot because of his clarity of thought and the way he used to approach with a solution to any problem. He was actually a problem solver when he was there in NSC for us. He is highly motivated leader and he has a consistent performance track record of over 38 years. 38 years. No one will look at you and guess that, that you have 38 years of experience.
It's actually 40.
It's actually 40 now. Oh, 40 years. So congratulations for completing 40 years of amazing experience. He has a diversified experience in the Indian financial market. He was a former MD and CEO in Indian arm of Bank of America. He has also worked with leading public sector banks with over 20 years of experience at the National Stock Exchange. He was responsible for significant transformation of the Indian capital market, and I am party to that as well. My experience of 17-18 years of market and the growth of the market fortunately have been under leadership and guidance of people like him. Today we are what we are is because of the efforts all of you have made. Thank you, sir. Thank you for coming all the way. So he was kind enough to come to Goa and grace this occasion. Thank you for accepting the invitation. You have other engagements as well, but for you to invest one full day is always a challenge, but I'm really very grateful to you. Sir, I want to start with a lot of things, but before that, we really want to know more about you as a person, your career, some learnings, key learnings from your life as a financial market professional. We all are here to make money, but you have always been someone who has facilitated that journey of making money for everyone. So please tell us about that journey and then we start specific questions.
Sure. सर्वप्रथम सबके लिए मेरा सादर प्रणाम और विवेक जी को मेरा धन्यवाद, स्पेशल धन्यवाद। मेरे लिए ये तो बहुत बड़ी खुशी और गर्व की बात है that I am sitting in front of you and I am addressing. जितना विवेक मेरे को बड़ा करके दिखाया उतना बड़ा हूँ कि नहीं मेरे को पता नहीं है। बुजुर्ग हूँ वो मैं मान सकता हूँ वो तो डेट ऑफ बर्थ दिखाते रहता है। जितना तक मुझसे आपको बोल सकता हूँ मैं, जितना उतना बता दूंगा मैं.
जी.
So I was born, of course, 60 plus years before in Chennai. In those days, it used to be called as Madras, and my schooling and college was all in Chennai. I was basically a BSc chemistry when I started looking for a job. Over a period of time, I became a certified associate of Indian Institute of Bankers, what we call as CAIIB, which is open mainly for bank employees. And then I became a cost accountant, ICAA. And then I completed my financial risk management, FRM, with GARP, Global Association of Risk Professionals, New York. Out of this 40 years of service, a few years were with Indian Overseas Bank. Before that, there were a lot of chotomotos. And 1.5 years almost with State Bank of India as a probationary officer in those days. And then I went to IDBI, the Development Financial Institution, and worked there for around 7 years. IDBI was given the project of setting up National Stock Exchange, joined National Stock Exchange, and was there almost for 20 years. And post that, in 2014, I decided to move out. I was offered a job of MD and COO by Bank of America for looking after their entire Indian operations along with the other franchise associated with the Bank of America. So I decided to take it and move ahead, and I moved away from stock market. And honestly, I thought, bye-bye. But destiny always has something else in store. And from Jan 4th of 2023, I am destined to serve this community once more, which I am very happy to do, and I have joined here. In a nutshell, if I have to tell you my experience, nobody is small, everybody is very big actually, if you look at them carefully. This is one lesson I have learnt. People who looked very small 20 years before, they are very big today. By whatever standards you take. People who looked very, very big 20 years before, today they are nowhere. So this one lesson is nobody is small, nobody is big. That is one lesson I have learnt. The second important lesson that I have learnt is every problem has a solution. But beware, every solution brings a new paradigm of problems.
Wow.
So the journey of the problemless situation is a destiny to which we will always be going. None of us like problems, right? We want to have sukh, shanti, vagera. So that is a sort of a distant situation where always we are marching. Because every problem has a solution and every problem provides an opportunity. The thing is, the moment you think that you have resolved it, that solution creates a new paradigm of problems which you need to resolve. So these are some of the overall lessons that I have learned. And one more important point as a human being, what I have learned is, you can become big, small in the eyes of others. You are whatever you are internally. So try to remain as much humble as possible. Never allow what we call as so-called success to get into your brain, because neither success is yours nor failure is yours. It is the situation which makes people look at you as a success or failure. If you allow a perception to get into your head, you are actually going towards your own downfall as a human being. This is another I'm sure most of the people in the audience are able to relate every one of this to the last 20 years journey. So nothing new. Every one of us know that. I'm just voicing it here.
No, it's very important at times for someone like you with such a strong experience and wisdom to re-emphasize this. If all of us go back home and our father figure is always there to talk about these things because they want us to be grounded and the Indian value system. So for us in exchange, I mean obviously exchange is the mother, and the person who leads the exchange is the father figure for us. So it's important for us to read these things again and again. So thank you for sharing these important wisdom. Now, sir, exchange. Let's come back to the exchange. Let's come back to, because we have so much to talk.
A natural course.
Okay, that's fair enough. So let's talk about Bombay Stock Exchange. So you have joined recently. I don't want to talk about the past. I want to talk about the future, because I personally feel that there is a huge leg, where we can improve in a lot of things. Very personal question. Why did you join Bombay Stock Exchange?
It's a very nice question. So, I was continuing as MD and COO of Bank of America. When you continue to do the same thing, you develop what is called as a comfort zone. Honestly, I had also developed a comfort zone. And I could have continued, though I was 60, I didn't retire, and I was continuing and would have continued. So the question that you are asking me honestly came to my mind as well in November 2022. Because November is the time at the end of which BSE invited me to become their MD and CEO after getting SEBI's approval. November 30th to be precise. So this question crossed me, why me? The next question is, what is in it for me? Why me and what is in it for me? Should I continue in my comfort zone? Should I get into a discomfort zone? Anything which is not comfort zone is a discomfort zone.
True.
When I used to work in my previous organization, in my screen, I used to put a screensaver. Discomfort is development.
Okay.
I used to show it to people, whoever walks into my office. Discomfort is development. If I am discomforting you to do better things, it's because it's for your own development and for market's development. I used to show that and say. So then I said, is it only for others we tell this, or is it true for us? It should be true for me as well. So discomfort is development, but whose development? Am I expecting any personal development in it? In terms of human being, every one of us develop every day. In terms of wealth or name or fame, am I expecting any development? Is that going to be my driving force, or what's going to be my driving force? The first tick every one of us want to put across is, when you join any organization, is it okay for you? Because my life has been spent in only earning one important thing for me, that is credibility. Because after 8 years being away from the stock market, when I come, if you are recognizing me and you are talking to me about my past, I think I have established some credibility in my previous jobs. So the one thing which I have earned is credibility. So will be joining BSE, tick mark that, yes. Because BSE, with its 148 years of legendary existence, having seen so many turmoils and coming out of it with life and success, is a great institution to work for. It's an institution to work for. So that box is ticked. So when we talk about what is in it, I thought, if you look at the country of India's size, having a single market venue is not probably good for the country. The involvement of technology today in our stock markets is very high. Many people used to come and tell me that, look, why there should be multiple venues in any country? Many countries have single venue, single electricity company, single power, single railways, single airline. What is in it that no, you are such a different country that you should have multiple things everywhere? My answer is, first of all, simple answer is, India is different in everything that it does. That I don't have to tell. Every one of us understand what we mean. India is a very different country with different type of ethos and thought process and way in which the people think, act, work, and its culture. India is mixed culture. Some of those countries which you're talking about having a single culture, no. It's a land of multiple cultures simultaneously, peacefully coexisting. So for this country, that is one reason. Second is, if technology is such a backbone for stock market operations, starting from entry of a member to the expulsion of a member, right from KYC of a client to getting ultimate the final settlement, so nicely dovetailed and with such different type of thought processes, novel many a times, there can be one day when technology can really act funny. If that happens, should all your eggs be in a single basket? Therefore, that is one another reason. Oh, that could be a 8 sigma event that happens everywhere. So be it.
Yep.
So why we should have multiple venues for that? That could be another argument, right? For that argument, what I would say is, it is just not that for one 8 sigma event you should have a multiple venue. Second is, all stakeholders are always at check when there are multiplicity of services. That's a very important requirement in any market. And also people like variety, because when variety comes, there is a product differentiation, there is a product innovation, there is some product details which are different compared to that. Basically, even if the product remains the same, new products evolve. And so if the income at a gross level with one venue is X, not necessarily with two venues it will be T2X, there is always a greater probability of 3X and 4X. Why I should be worried about somebody else's income? Right? My income may not change, so why I should be worried? No. When the income changes for any community, what happens? It happens because of space being rented out, employees coming in, hardware being bought, software being created, AMC contracts, on and on and on and on. So income leads to consumption and saving and further investment, and therefore development, therefore income. It's a cycle. It's country's development. So at this stage, when I look at it, for me, it is one another opportunity for me to give something more to the marketplace. I always say, we all are like chammach. खीर का स्वाद चम्मच नहीं जानता है, बट बिना चम्मच खीर को परोस नहीं पाएंगे. अगर दूसरों को खीर का स्वाद समझ में आना है, चम्मच की जरूरत है. क्यों ना हम बने चम्मच.
Fair point. Amazing. So, I mean, he has such a rich experience. आपको ना one-liners बहुत मिलने वाले. I remember when I used to go, we used to plan a visit to meet Sundar sir. बहुत homework करके जाना पड़ता था, because convincing him without data was always difficult, and his clarity of thought process is so much. That's why I become so hopeful of BSc, because I know that someone who is now sitting at the top will percolate much more clearer vision for the organization than what it is right now. So, a lot of us don't know about BSc, frankly speaking. Most of the people out here, because they are retail traders, they just see what brokers are showing them. Could you tell us where exactly is BSc right now in terms of which segment has what volume? Do we have anything unique in BSc which we should look at? Some more details about BSc.
Sure, that will be a great pleasure of mine. BSc is, as I was just referring, 148 years old. Next year we will be celebrating 150th year. It is not only the oldest stock exchange of India, it is also the oldest stock exchange of Asia. Today it is like other stock exchanges in the country, a superstore. What do I mean by that? You have whatever you could conceive as financial market product, you find it here. Cash equity, equity derivatives, currency derivatives, commodity derivatives, interest rate derivatives, retail debt, mutual fund, on and on. Lot of facilitation for IPO market. We can give the list. So basically, whichever gamut of financial market you could think about, you have them in BSc. When we talk about where it stands today, one more important point is, all the members who are there in other exchanges, they are also members of BSc. There are certain set of members who are uniquely only BSc members. Today they may be small, but there are a unique set of members who are only BSc members. They were all from the old clan of BSc. People talk about a tree below which BSc started, and a banyan tree under which it started. That's what people talk about, the origins of BSc. And BSc building is a landmark building. BSc Sensex is a landmark index which everybody likes to look at and follow. When there are so many marketplaces that are available in this, market segments that are available, what we find in terms of performance, BSE is a mixed bag at this point of time. There are some places where it is very strong, some places it is strong, some places where it has to become stronger. That's the way I would put it across. To take mutual funds, it is in a very strong position. It is helping today multiple investors across the country, across various IFAs and intermediaries to come into the mutual fund industry and put their hard-earned savings so that they can save it for a rainy day with a good amount of growth. It is helping and it is in a prime position. In respect of small and medium enterprises, which you know is the backbone of today, in the country today, it contributes so much for the exports, so much for the employment generation and all. BSE stands in a very good numero uno position of catering to the SME listings and their furtherance of their costs. So it's a very good part of BSE. Good part of BSE is in currency, we are doing well. Our market share in currency futures hovers between 30 to 33%. In currency options, I'll come about some changes that we have made. We are making progress and we are in a situation where we are strong, but we are not the strong. And in terms of equity, we have some better room for becoming strong. Today our market share is hovering around somewhere 7%. If we get into a slot where we even touch 10% market share, the normal phenomenon of liquidity begets liquidity happens, and then the circle automatically starts rotating. So we talk about moment of inertia. I'm sure all of us are aware. When there is a Rath Yatra, Rath अपने स्थान से निकलता नहीं है, बैठे रहता है. उसको बहुत जोश में आकर लोग जब धक्का देते हैं, उस स्थान से जब एक बार निकल गया ना, बाद में it becomes cakewalk. People just pull the rope and it moves. जिसको हम moment of inertia कहते हैं. So at this point of time, somewhere in the 7%, 5 to 7% range, there is a moment of inertia and BSE बैठा है. इसको और थोड़ा सा जोश और धक्का दे देंगे, थोड़ा आगे निकल गया, रथ यात्रा शुरू. In equity derivatives, it's not in a great shape. It almost does not have much volume. Commodity derivatives, there is not much of a volume. Interest rate derivatives has not taken off in the country itself in a big way, on and on. So this is where is the stage at which it is. There are quite a few things that we are planning to do in each one of these areas to make BSE a better place. If you want, I can talk about it now, or if you want a separate question for it, I can talk about it that time.
So I think you can continue with that.
Okay. So what we felt was, what is the purpose of me joining BSE? Only one single line. BSE has to become a vibrant stock exchange. That is the motto of mine. Why? You at least require 2 vibrant stock exchanges in the country, where not only on a rainy day, but also in terms of your own having a better stakeholder management and also multiplicity of product and product innovation, product development, interplay of products, product differentiation, making more opportunity of better hedging yourself and trading in better quality products, you require 2 vibrant exchanges. So for me, the goal is to make BSE vibrant. I can make that only through these market segments which I have with me. So in terms of equity, what we found was somewhere we have to do some small things whereby we are able to create the attention of brokers. What we have to do, I am talking. What brokers have to do, probably we can separately talk.
Sure.
So we looked at BSE's way in which the trading happens, and I found one unique feature there. Up to 15 rupees of stock, BSE already had a tick size of only 1 paisa. So I just wanted to understand what is the difference in market microstructure in respect of this 15 rupees worth stocks and other stocks at BSE. If that has some lesson to tell us, probably we should replicate it elsewhere. Believe me, it had a lesson. I found the delivery percentages are very high, 52%. The order to trade ratios in respect to the 15 rupees, less than 15 rupees stock is very high, but very good, not very high, very low.
Yep.
And the impact cost of around 186 securities which are there in that, 106 securities, I found the impact cost better. And I found That to be a very interesting feature. And I also found one of the script had derivatives in it.
Okay.
My management committee, when we discussed this result, suggested to me, why don't we extend it to up to 100 rupees? For all scripts up to 100 rupees, why we should not have a tick size of only 1 paisa? We can do anything we want, but it has to be what the market wants. If market doesn't want something, whatever we do, it's of no use, because we are here to serve the market. So immediately, like my olden days, we picked up the phone and talked to a multitude of brokers and asked them what their views are. It was very welcome from them. So we have introduced it. From March 1st onwards, in respect of all securities up to 100 rupees, the tick size in Bombay Stock Exchange is 1 penny, and we have found a volume increase of around 25 to 30% in these scripts in BSE from where it was. A
And
small beginning.
so vis-a-vis other exchange, they still have say 90 rupees stock, the tick size at 5 paisa?
That's right.
Okay. So how that translates into better opportunity for people who are trading?
Honestly, I should not be talking about it because I'm not an expert there. But
Okay.
what I was told is, when there is a position to be offloaded, net of whatever the market making is, if the tick size is low, it becomes easier to get better liquidity and put it down. That is one of the areas which was suggested as the reason for it being meaningful. And for retail investor, if they have to buy and sell, and there has to be a round trip cost, if it becomes 1 penny, it becomes easier. Sure. So there were multiple reasons that were given to me. Since I am not an expert, I should not be telling that they are the reasons.
Sure.
As an executor, when people told that it is a good idea, what we saw as parameters were impact cost, delivery percentages, order to trade ratio. This is what we saw, because this is with us very clearly. There we can claim that we have knowledge. So that we found that as working. So this is how it got introduced. And in my opinion, it is working well. In Calcutta, when I was there, I was in one broker's office. That I was on March 1st at Calcutta. March 2nd, I was in Calcutta. So when I was in a broker's office, somebody came running to the person with whom I was meeting and said something in his ears. That person asked me, did you hear what he said? I said, no, he told you in your ears. He is telling that we crossed 200% of whatever yesterday's our volumes were in these stocks. And he wanted me to tell you that it was a good move.
Okay.
So I felt very happy. But what happens is, we think that we have talked to n number of brokers, so it has reached everybody, but not necessarily. Many a times, any amount of information dissemination is not sufficient, because the country is diverse. On currency, we found that in the flavor of the day today is options. When investors find options to be a very interesting product to trade, what should be the way in which the market should be guided towards options? So we were talking to some of the people. One person told me, one of the market participants told me, that today you have a strike price interval of 25 paisa in USD INR. Actually, that is not the right strike price interval. I asked him why. He told me, you go and check for n number of years what has been the high-low variation on an intraday basis, and then you arrive at your own conclusion. I asked him, what is your suggestion? He said it should be 10 paisa. More than that, he didn't say. Believe me, I talked to some of the market participants, and one of them sent me an old mail which was sent, which had all the analysis and told why it should be 10 paisa and why it should not be 25 paisa.
Oh.
That was dated. So I tried to replicate it for a current day and see whether it still holds good.
Okay.
And believe me, it held good. And I went to some of the high frequency traders and asked, what's your view? They said, that's what we are waiting for. I asked why. That person said, see, the theta decay is very high on a weekly option on the last day. When I want to delta hedge and move across strike prices, now if you have a 25 paisa strike interval, which is sometimes more than even the intraday high-low, how am I going to travel the various strikes and do a delta hedge dynamically? I said, boss, this is Greek and Latin. I don't understand any of this, but if you say the 10 paisa is good, I will see whether I can do it, and I will do it. And I did. And I think there is some amount of traction. It is early days. From March 6th, it got introduced. I'm proud and happy to tell you that thanks to the volatility in the USD INR today, as of 3 o'clock, I have done 1600 crores notional in currency options. I am sure this is just a beginning and I am sure it will go up further. It's a very healthy market where you are having a meaning as to why people are trading, and I am very glad. So this is the second thing that we have done with regard to currency derivatives. I do not want to leave equity derivatives as a last case. Why? I feel there is a good amount of room for people to better use their capitals which are lying fallow most of the days in a week, because capital utilization gets concentrated towards expiry. That's what I am told by the market participants. And not more than 1.5 days are today employing the current capital. So I am planning to reintroduce Sensex 30 options and futures and BankX options and futures. BankX has 10 stocks, Sensex has 30 stocks. The correlation of these indices with the corresponding indices elsewhere is greater than 99.5%.
Wow.
I am planning to introduce them on a Friday to start with. Again, this day was decided with consultation with every one of the market participants that I know. And we feel once this happens, we are also approaching the regulator. We will be approaching the regulator for having weekly options expiring on multiple days in a week, as it has been introduced in US.
Yep.
That will be subject to the regulatory approval, where we will go and tell them the rationale why we are thinking this. It is not just to provide more and more trading volume capability. It is for people to have a capability to have specific views for specific days in a week, so continuously the views can emerge. Now, no longer long term is long term. If you look at it, when I was a young boy, once in 3 years or once in 5, capital gains used to be once in 5 years, I guess, before. Then it became once in 3 years. Today we are talking about 3 years, because balance sheet profit and loss used to be published only once in a year, if at all it is published by many of the corporates. And today we are having every quarter, everybody telling you audited and unaudited profit and loss and bank account. The concept of time is changing. So therefore, I think the time has come for us to think in this fashion. So we are planning all this in respect of equity derivatives. These are some of the plans. Plans do not ensure success. Rath on its own cannot do its yatra unless and until there are people who can pull the rope. When they pull the rope, do they put in energy and effort? Yes. What do they get back in return? They get a lot of joy and blessings. In this case, it will be a lot of money, right? Therefore, there will be a huge amount of support required. There are a lot of challenges there. Probably I will reserve it for some other question in case you ask me.
Yeah, so I mean, just want to make a small point. When Sensex Future was very active, my team used to trade, and I can tell you that it is far more superior index, because 30 actually is the perfect number. It is not over diversifying, neither it is giving too much of hollowness to an index. So this 30 composition, if it works well, I think from a trader's perspective, it will be exactly what we want in terms of slipperiness in the movement. Because right now, even if market goes up, all the stocks goes up, the other index takes some bit of time to react. But Sensex will have 30, it will obviously react much faster, means better opportunity to trade the delta in the market. So thank you. I hope, I wish it really works, and it is much needed product to be revised once again. And I can tell you this, that all of us here will be very closely looking at the index movement, and we will try to push our broker to make sure it is available, because ultimately it's a broker who has to provide those, and I'm sure we all will be ready to do that. Sir, I have a lot of questions, but as I said, that it's not just about me and you, it's about all of us here want to talk to you. So we'll take questions from people. And in the meanwhile, if there is any gap, I will obviously ask my questions in the meantime.
I think so. The kind of clarity of thoughts that you brought, I think I've seen BSC doing this for the first time, to be honest, very honest. on that front. My question is about extension of trading hours, because as a trader, we want to participate in the global arena, and how, in the morning what happens and in the evening. So just want to take your view about what's your thought on the increasing of trading hours.
Sure. So before I get into it, even if I extend any timelines, I do not know how many of people will be benefited. Why do I say that? Many of the brokers do not provide BSE in all their segments, in their front ends, to the dealers or to the investors. So that's what I said. I can provide a Rath nicely decorated with a very good rope and mazboot. Unless and until you all pull it, it is not going to move. When I go and ask them, why are you not providing BSE's trading screen? You are a member, you have paid me a membership fee, you are continuing to paying me a membership fee. You are not providing it. What people tell me is because they find adequate liquidity in one exchange, so they don't require yours. Third, no investor has till now demanded it from me. So and fourth, there are so many regulatory changes. I am very busy technologically catering to all of them. Where do I have time to look at BSE? It's like this. There is a big difference between entrepreneurs and employees. Employees look on a day-to-day basis. Entrepreneurs look today, tomorrow, and day after tomorrow. Please wear an entrepreneurial hat. If you don't provide, nobody is going to look at it. If nobody is going to look at it, you will say you are not providing, nobody is looking at it. If you also subscribe to the view that the country requires at least 2 vibrant exchanges, if you tell your software vendor, he will provide, because he is there for business. If you ask, he gives. So if he gives, you test and take it. Don't say that I don't have time for testing, because you are not investing for today or investing for tomorrow. You know what? You will not know who moved your cheese away. Right? We all have read that book, isn't it? Who moved my cheese? So this is very important point. So if you don't do any of this, whatever I may have views on extended market timings or not, they are purely academic and is not going to serve you. I can bring you new products, I can bring you product differentiation. I will not be able to do the intended service for which I have come here if you are not going to take it. This is one part. And the second part on extended market hours, which you asked specifically. Exchanges or purveyors, like I talked about, a chamach. We have a system which is capable of running almost 24 hours. It all depends on what is the need of the market, how strong the need it expressed, and how relevant it is found at any point of time. It is based on the demand. Here it could be provided because the supply is already in existence with all the exchange. If there is a unity in the voice for any specific segment or any specific product for all the segments, and if there is a merit in it, nothing prevents, because regulators have been kind enough to permit for us to do whatever we want in terms of market hours.
Okay.
So that would be my reply.
Okay. I mean, diplomatically, I think correct answer. But I think we are very close to that phase where we have to live with it. The time will get extended. Yeah? Okay. I was able to get it from him. Yeah, Ashwin bhai, you would like to say something? Yeah, thank you. Thank you, Santosh.
Hello sir, good evening. Ashwin Porwal here. I am actively trading this market from last 20 years, and I am a cash market trader, not more of option. So my major volumes are in cash. So I have seen all the era where earlier we used to get 5-day settlement, then we reached to T+1. And my basic question is related to ASM, GSM margins, that we understand why exchange has put all these margins to protect the traders or investors. But what we feel like, whenever the volume comes in a particular script, even on a script which are on derivatives also, when the heavy volume comes, exchange put an additional margin in terms of ASM. My basic question is that if I am buying a 10 lakh rupees share today and I am paying early, 100% money I paid to the broker. So why I am and tomorrow morning I am a BTS trader, I am selling tomorrow morning. So as delivery is not in my hand, they are charging me 100 again, because the stock is in 100% margin in ASM. They are charging me 100% margin tomorrow morning. So the share which I bought for only 10 lakh rupees, I had to be in my account 20 lakh rupees. I am still not able to understand how it is benefiting me or any other person. Rather, exchange is trying to stopping me to trade that strip or prohibiting me. And being a trader, we want our cash market. I saw people. I am looking that exchange and regulators want people to be in trading cash market or become an investor. But if you want volumes in cash market, but because of this margin system, people are getting not they're attracting on the other options, future and option where they're getting leverage. Here you are for the basic product you're charging double margin, and there you are giving them the leverage. So the trader who is providing the liquidity to the market, liquidity to the investor, I feel always neglected from the regulator part. They feel that traders are, I don't know what, but see, I'm satisfied with both the exchanges, the way exchanges are developed in India, and the way our banking system has developed in India. We are in a safe hand. We always feel like that. But still, this margin system has always against the trader in cash market. So I would just want your take. I'm not saying, I just want your take on that. Thank you.
I'll actually split the question into two parts. One is the ASM GSM framework, which puts margins on securities. Second is adjustment of a position with a subsequently taken position. Because today you bought and tomorrow you sold, still you are paying margins for today also and tomorrow also. Why are you doing? That's what you are saying. So that's a separate question. That is not necessary whether you are paying 100% margin or 20% margin. In whichever case, today you buy and tomorrow you again sell it, then no, you are still going to pay margins on both the cases, whether it is 20% or 100%. So if you are telling tomorrow's sell should be adjusted against today's buy and you should not be margined, that would amount to what is called as a continuous net settlement. आज का कल का position से, कल का परसों का position से, on and on. That's not the market microstructure model at this stage for various reasons. Market microstructure, then what happens is it is not T plus 1 settlement. There is no finality of T. Then T becomes a perennial T recurring, right? So that's not the market microstructure model. So that doesn't work in this microstructure model.
So, but if you do an early pay-in, then?
You can do an early pay-in. Here, if you do an early pay-in of money for the stock, then you have in any case pay. You call it as margin or you call it as collateral. He says that he has bought it on today. So when he pays 100% margin, so typically I'm sure he'll be making early pay-in of it, of the cash.
Yeah.
Because otherwise what happens is not only margin, he has to make payment for the thing also.
Yeah.
So I'm sure he'll make early pay-in. So wo salat jayega. But for the next day sale, what he's telling is sale ko, why don't you adjust it against today's purchase? Yeah. Tomorrow's sale against today's purchase. Then it becomes CNS. Then it is not T plus 1 settlement. The finality of T never happens. T is recurring.
Okay.
That's not the market microstructure we are living in. With regard to the surveillance, see, the ASM GSM comes when there is a surveillance. Surveillance is based on what market does. You will have total privity to what you are doing. You may not have privity of what the market is doing and what is being looked into. Regulators along with exchanges have an objective framework. Every objective framework continuously evolves, and in this case also it continuously evolves, based on which certain scripts comes under a certain specific framework, and therefore a specific surveillance margin applies. Sometimes for some of the users it may look very difficult to understand because they are only seeing what they are seeing, whereas the regulators and exchanges are seeing a bigger plane.
So I just want to extend what Ashwin said, just for the sake of doing that. I agree with what Ashwin said, that cash market trader is getting suffocated. In the current environment, where the entire ecosystem is so pro options. Imagine the recent margin call where 20% margin you have to keep if you have to buy something. Sure, someone must have done something bad and we had to go through this. But if the same person wants to say bet long on a particular company, he can buy the premium, which should be far lower than the 20% margin on the cash segment. So what has happened, people are gradually moving away from cash and getting into options, which, as you said when you started, every solution has a problem and the problem can be far bigger than what we perceive it to be. So actually the cash market, which has not grown in our country, which was supposed to be a wealth creating platform, we have actually discarded that, or we have not taken cognizant of the need of that platform. And all the cash market traders, they became so suffocated that they went to options. Here also, most of the 90% of the audience here came here for options trading discussion. Although it's a trading conclave. We never talked about options trading conclave. But everyone is talking about options. So is this good? Are we going in the right direction? And what do we do to bring back life in cash segment?
So I'll split it into multiple parts and reply. Options are very versatile products. And they are far more versatile than any other derivative product because of the simple fact it provides optionality. Typically, options are only half risky. Why? Because when you buy an option, you do not generate risk to the system because you have paid the premium. Till you pay the premium, you have a risk, and after that, you don't have a risk. So every sell is with a buy. So half of the market is risk free, right? Mota moti. And secondly, the round trip transaction cost in respect of an option is very low. The capital deployment, therefore the leverage is. Capital deployment is low and therefore the leverage is high. And it is versatile in terms of you expressing range bound views, volatility based views, which are not possible in a linear product, which this curvilinear, non-linear product nicely provides you. So, instead of telling whether it is good or bad, if I were to tell it is a versatile product, nobody will disagree with me. A product by in itself does not become good or bad. A product becomes good or bad based on how you use it. If the product is used for all the features just I talked about, in terms of providing a range bound view on volatility, prices, underlying, the interest rates and whatnot, then no, it's a versatile product. It is giving a proper solution for all these views and opinions and ideas, and therefore indirectly helps in depth of the market, price finding, volatility stabilization and whatnot. So it does a very big role than simply acting as a trading product.
Yep.
But if somebody were to look at it as a low priced stock which is almost linear because of its short term expiry, and start betting on it without knowing what the entity, what the instrument is, then there is a bad impact of the option.
Yeah.
I'm not commenting on whether that's what people do or not. I'm telling a product per se is not good or bad. The product is a versatile product. If it is wrongly used, then there could be always any product will be bad. If rightly used, this product is a good product. This is an overall statement I make. Why I made this statement is part of your question comes there, and also there is one more reason. As far as equity is concerned, now coming to how to encourage equity participation in the country. If you look at the way in which the equity trading is distributed, notwithstanding all the things that we talk about our country and the way in which the cities are developing and all, hardly top 5 cities in the country contribute for around 85 to 90% of cash market volumes. You can make that analysis and see. Let me put it this way. A significant portion of the total volumes emanate from top 5 cities.
Yep.
And you look at the ads, you look at the media, you look at this room. What is the diversity here?
You will be shocked to know from locations from where people have come.
In terms of gender diversity? right?
Obviously, male
It is
dominance
very
is
obvious,
there.
right?
Yeah.
You took any advertisement and you look at any advertisement, changing of nappies, diapers, making milk for the child, it will be a woman who is depicted. Driving a car, making mutual fund investments or any investment product, who is depicted? A man is depicted. So BSc has already joined with you and women for financial literacy for women. So Nari Shakti is very huge in India, which we are clearly seeing. If we were to educate more women in safe investment in the markets, in products like mutual funds, and if we go to tier 3, tier 4, tier 5 cities, and if we catch the students young in their campuses and tell them the values of value investing in stocks, probably through mutual funds or with the diversified portfolio, that is the way in which we should develop the market. I think there is a good amount of scope for doing things there. I was in a ceremony in one of the cities in the country where around 10% volumes are coming from equities without naming the city. There is an all women's bank there. I met a person who is a director there and I was telling what we can do together. That person said, we have 200,000 employees in our bank. I think you guys should educate us in financial literacy. How they can look into these stock market products, not directly, probably through mutual funds, which is safe for them. Today we are talking of SIPs of 11 rupees, 12 rupees, 20 rupees to be coming in place, or at least 100 rupees per month or 100 rupees per day, whatever it is, right? Why we should not go to that? Why we should not extend that? Probably that is one way in which we can develop depth. So what am I trying to tell? To combine both the parts now. Investor education. However much we do, that is becoming insufficient. And all of us today have started thinking short term. Today, if I am able to make money in one product, that is where I put all my efforts on. Instead, if at least some of us think for tomorrow and day after tomorrow as well, and if we go and spend some of our energies in Nari Shakti, youth energy, and start educating them about value investing, if they come to mutual funds, they are going to come into the equities market get built. That's my view.
Sir, I understand from an investor perspective, I think it's a long journey and a great future we all are seeing. The overall density of population involved in market is quite less. So, and we all will keep on doing that effort of bringing at least our family members in the gamut. I am so proud to tell you that all our experts who are here, their respective better half is also into the market. I mean, 2-3 experts were trading, the better half was sitting there and they were also trading the similar. So that concept of togetherness, growing together, making multiple income sources now is getting established in India. But my again concern is more with respect to trading cash market because of high STT, because of so much of margin requirement. Maybe a request to you that whenever you are in a right forum, in a regulatory forum, maybe you can represent us and say that cash market needs breather. Otherwise, if traders are not there, the liquidity will not be there.
My question was on a macro level, the role of exchanges in monitoring the volatility. Like if we compare with the US, our growth story is good, and therefore possibly the valuation, P valuation of Indian market is 32, whereas US is half. Premise being that we'll grow. And last 10 years, the return are by and large same 9 to 10%. Of course, in 22, we were almost double to US 6 versus 12. However, when it comes to volatility, US is around 3.9, we are 5.10 something, which possibly gives a kind of step back to the investors. Should I go, should I not go? So my thought was that if that can be stabilized, then more investments could come through. Here the role of exchanges, if any, and your thought person. Thank you.
Exchanges do not set the volatility. Exchanges are platform providers. When investors trade and when investors react to market news, volatility gets generated, right? So the market news and the way in which people react to the market news, what generates volatility. My understanding is every country is dependent on very many things like India, and in a developing nation or in a, getting into the throes of a developed nation type of a situation, the dependence is huge. So every news gets magnified. That is one. The extent and level of trading in India is far more than what it is in many of the developed countries. So naturally, the noise generated by the information asymmetry is very high, and therefore volatility gets generated. And is it true that many of the market participants actually love volatility?
I mean, you are in a trading conclave, so yes. So I have an interesting question, and I think it's something which even I will echo. That can we trade option spreads directly from the exchange, especially in the currency segment? So maybe just like we have calendar spread ready window, similarly straddle, strangle, iron fly, ready.
So what I am told in BSc, so I will call it as multi-legged orders.
Yeah, multi-leg orders.
I'm rephrasing it
Yes.
for my own benefit. I'm told that BSc has up to 99 legs level capability of multi-level orders. My APIs provide for it. That is what my trading technology team tells me. So if somebody is interested, they should look at our API, and probably that will help them.
Oh, that's interesting. So when you say BSc API, that means a client can directly connect.
So for example, for my trading, if you
Yeah.
want to develop a front end,
Yeah.
it will require an API, right? That API provides for a multi-legged order, not just to 2 or 3, extending far beyond it.
So that has to be then a unique front end or some kind of an algo.
Most of the people develop their own front end, right?
Okay.
If they develop a front end.
Okay.
See, the problem is today people are going to the shelf and taking it something and then customizing it.
Yeah.
And in the process, they get a banaya stuff, then they have to do only limited delta work over it. But the problem is then you are forced by the idiosyncrasies of the system provider.
That's interesting. He has too many things on his plate, so he doesn't want further food to bring indigestion. So there is an interesting point, introduction of leverage in indices, ETF products. In US market, there are leverages on ETF.
No, so if I understand this question, what it means is leveraged ETFs. What they do is, in the kitty of ETF, today what we have is a basket. That basket has the same constituents of the index if it's an index-based ETF. And it is held in terms of actual cash equity, not a leveraged position. What do we mean by that? Let's assume if you take StockEdge, which is number 1 in Sensex, let's assume, if it's a Sensex ETF, whatever is the proportion of StockEdge, that's what is held as equity in the basket, based on which the units are issued. In other countries, what they do is they have options on them, because in many other countries, futures are not that popular. They don't take a stock futures position, they take a stock options position. So that leaves them with a lot of cash, and therefore they reinvest the cash in multiple other investments based on whatever is the ETF document provides for. So they will always be, their ETF will be not a passive basket, it's a very active basket, which therefore sort of mimics the index but gives always more alpha than the index. That concept is not accepted in India at this point of time, regulatory, for very many good reasons at the time when it was rejected. So if it has to be rethought about, it can always be done, because things change over a period of time. But at this point of time, the regulatory structure provides for ETFs having the equity stocks under them.
Sir, there are questions by Pramal Parekh, but before that I want to ask this question. Retail always has this concern that my money goes to a broker. Is that money safe? Do we foresee market structure where money actually directly goes to the clearinghouse bank account, not routing through a broker pool account?
So today we are talking about upstreaming of margins and collaterals, where the client's money go directly to the clearing corporation. It's in the offing, as you are aware, and it is coming out. So I think that should address the question.
So that is there. I mean, full-fledged.
At least in terms of retail investors, it's happening, in my opinion.
Okay, that's great. So Pramal Bhai is a very good question, and this is my need as well. Can we have more sector indices? I personally feel BSc sector indices are very good. I mean, somehow we have stopped producing more sector indices, and there are sectors like new sectors like sanitary ware, food and beverages, small cap IT. So as we have more category or themes coming in India, there is a need of sector indices for every theme.
Sure, there is a history, geography for like everything else in the world here as to why there were a lot of indices and why there are no indices. Things will change soon from the BSE stable. There will be more indices to come. Having said that, one word of difficulties and challenges, every challenge is an option, which I told before
Yeah,
also.
yeah.
Is an opportunity, sorry. Every challenge is an opportunity. Having said that, there are some challenges in sectoral indices. A sectoral index creation is a slightly difficult proposition. How do you construct an index? Typical things like what methodology? It's equal weighted, market capitalization weighted, free float market capitalization weighted. They are simple things. Then you have the number of stocks as a requirement and also the base date and the base value. The number of stocks is very important because if an index has too small number of stocks, it's a manipulable index. If it is too large, it is an irreplicable index. It has to be somewhere in between. For that, the pool of stocks from which you will take, what we call as replacement pool, should be very strong. In India, if you look at banking stocks, you don't have more than 23. So out of that, when you apply criteria, you will end up with 20 or 15, and then you cannot have an index which is more than 12 or 13 maximum. That is for banking stocks. Some of these thematic indices, it will be easy to construct, very difficult to maintain.
Yeah.
So that balance has to happen. So my short answer is, yes, you will have more indices coming through in the near future. There are certain loose ends to be tied, which I am working upon. 2, beware, there are always challenges in giving a meaningful good index which will have sustenance for a long time if it is thematic in nature.
Sure. Point taken. So BSE is known for its fantastic data dissemination. In fact, I would slightly disagree with Santosh on this. Maybe you are looking at options data, that's why you found that web page to be exciting. But I think BSE website is the mecca of quality data. And because StockEdge also works with BSE in terms of getting official data from you, we know the quality of data which you produce. My only submission to you is that please take that data dissemination to the next level by producing more and more things in an efficient manner. That's a feedback. Because we don't actually go to NSE website for corporate data or any kind of data or any other website, not mentioning any exchange. But BSE data is very important for all of us, BSE website. So if the team can focus more on quality data, it will really help.
3 comments.
Yeah.
I didn't want to negate what he said, so I kept quiet. But let me tell you something. In respect of listed company information, I am always 2 clicks away. In terms of annual reports, BSE is just 2 clicks away. Block and bulk trade data, it is evidently available on the front page when you click. I have a date range for price of stocks. Others don't have. These are just 4. I have some 10, 15. So the data dissemination, as you rightly said, in BSE is good. We have started disseminating 20 deep order book. We have not priced it till now, so we will be pricing it soon. It may not be priced at the levels at which it is generally priced elsewhere, but we will be pricing it because things cannot be for free for long, because there is an issue if we keep it free. And the third point what I wanted to make is, if there are any specific data requirement for the market which I can cater to, please feel free to tell us. We'll be more than happy to work on it. We are here to serve you.
Fantastic. Thank you, sir. This is a question from Praveen Bhai. Vision was to benchmark India with global standards. However, our margin system is very conservative. Most advanced countries, including US, works on span margin. Why do we have span ELM exposure margin? In some cases, our margin requirements are 3 to 5% more than what actually is required.
We do have span margining, but you also acknowledge it. You also say that apart from span margining, why we are having other types of margin?
Yeah.
The answer lies somewhere between this corner and that corner. So if the volatility is going to be very range bound, you don't have to think about the 6 sigma and 8 sigma portion. I'm sure you are aware as to how span margin works. It takes 1 sigma up down, 1 tick up down, 2 sigma, 3 sigma up down, and then 6 sigma only up, only down. That's how the risk array is built. And then the worst case margin for a single underlying across all the derivatives and the underlying put together is what it is taking as margin and throwing you out as a margin number. It's a very scientifically constructed one, so long as the events are only being talked up to a 6 sigma level. But given the volatility, irrespective of whatever you put as price range and all, you go and touch beyond this. And the settlement risk is huge. Given the type of participants and the diversity of the market today in India, which is far, far, far different from any other market in the world, the concern for anybody would be to ensure stability, even if it is at the cost of extra margining. We will not be able to control a mass behavior, but we will be able to certainly ensure the traffic lights are on properly. That's what is happening.
Actually, we can all, as a very active market participant, we can always ask for more. और मिल जाए तो अच्छी बात है, और मिल जाए. But I must tell you, we have to compliment the regulator that in any kind of fiercely volatile environment, we never feel uncomfortable in market. Because the margin system is somehow there to protect us. We may feel the heat of lesser return on equity because of this structure, and that eventually gets priced into the market. So if you have capability, you'll still generate high return on investment because we all are in the same parity. So I would say that regulator and exchanges have done a good job in protecting
Honestly,
our
we should
structure.
compliment the regulators. The regulators have been really very proactive in their thought process. Exchanges just support the regulators by implementing what they say, and wherever we can contribute something in terms of our ideas and views, we contribute. But the regulatory will to ensure a safe market, the preamble of SEBI Act starts with to protect the interest of investors. And I think that is therefore etched in the gene of the genes of them, the DNA of them. And that's why, thanks to them, there is a safety in the market today.
Yes, sir. Sir, because it's a trading conclave, I want to voice my concern on behalf of Indian traders. Now, as you know that India is a very high tax, extremely high tax regime. We have to pay tax when we are trading. We have to pay tax if we generate profit. And eventually the tax for a trader who actually takes so much risk is actually very stressful occupation. That after going through so much of stress, you make some money and then you see government is taking significant part of that tax, which is okay. We want to build our country, हमको भारत बनाना है, तो it's okay, we are ready to do that. But then foreigners who are coming to our country, they don't pay tax. So we are in the same microstructure, same instrument, everything same. We are paying tax. We are penalized to be a citizen of our country. And foreigners are coming through FPI route and they don't pay tax. Where do we go? Whom do we talk to? So I'm expressing this to you because, I hope someday you represent us whenever you are there in some kind of a meeting with ministry or somewhere. That this is so inhuman.
No FPI pays tax.
I think FPIs, they don't pay tax, right? There are tax treaties, you don't have to pay tax. The entire country is moving to Dubai. So, someone has to voice this very honestly because it's a very difficult world we live in, sir. Trading is a very difficult occupation. And you have seen it. I don't have to say this to you because we have interacted about this earlier also. Someone has to sound to the government that this is not fair. You can't penalize. Then we all will move to Dubai. You want that? Most of the big traders are moving to Dubai. So this is just for record and obviously for record online so that people will know that someone did raise this point. Sir, any question with anyone? Anyone? Okay, he has a question. Can you please introduce yourself here?
Peak Sagal from Panipat. So basically I trade into cash market only. So my question is like in FNO, it is counted as a business income. But if I trade in cash and I'm selling it by like tomorrow or day after tomorrow in 2 days, it counted as a short-term gains only. So why is that so?
I'm not the right person to comment on this, so I will not be able to comment.
Yeah.
Thank you.
Yeah, and I think, Ashwin bhai, you want to elaborate? Because there is a lot of It's not a black and white. There's gray area in that. Maybe Ashwin would like to comment.
So you are right that you are not right person to answer this. It's related to income tax only.
I just want to add his point is only that being a trader from last 20 years, I am paying taxes by business income only. So no short term, long term I am paying through business income. So I know why income tax has put intraday trading as a speculation and the other part BTST or what delivery as a business income, but not the set off. But this is the biggest problem I can ever think for a trader, where I am making losses in intraday and in BTST I am gaining, and net off I am not gaining anything, maybe in loss, and I am paying taxes on BTST part where I have not any money. But I am just saying again, I'm not saying answer to you, I'm just saying I don't know where to put this point, which forum or which platform I put this point, that this is almost inhuman to pay taxes where I'm not making money. So there should be some mechanism that if a person is paying his taxes in a business income part, this set-off he will get. That's what I...
So you have become our agony aunt. So which is good. I mean, I know you for so many years and you have been always good with your patience hearing. I hope you raise these points. So what I want to propose, sir, I'm going to collate few suggestions from people. I'm going to give you a document that these are the concerns which Indian traders have, and maybe whenever you feel, whatever platform you feel you can.
My request is also give probable solutions to the problems.
Yes, yes.
And some of the points which were raised as problems have been there for time immemorial. The very fact they are not resolved clearly indicates that there are counter reasons very strong in the minds of people who could resolve, which prevents them from resolving it. Right? So we should bear that in mind. The second most important is, which we all are very good at it, while problems exist, still we prosper by taking roots up. So wherever we can improve market depth, market liquidity, market coverage, whatever we could do together to do that, that will be a very positive thing to do.
Sure.
So these are two thoughts I would leave there.
Fantastic. Sir, you're ever optimistic person, and we are going to end this discussion in an optimistic tone. Do you want to ask any question? Okay. Please kindly introduce and then ask the question.
I'm Rahul Jan from Delhi. I come from a non-ferrous trading background. I'm manufacturing and trading. So as in my family, I've always realized there's a huge gap between non-ferrous traders. Either they are importers, exporters, or physical traders, or there's a derivative market. There's a gap that usually internationally we have commodity ETFs. We only have in India with gold ETFs. So do you think this can start now? Because I think there's a huge need for commodity ETFs to be introduced in India in exchange.
See, exchanges will always be very happy to introduce any product which will serve the country. If we feel in non-ferrous area, ETFs will do good. That means already since gold ETFs are there, which are not doing that great. They are doing but not do so great. I presume that you are talking about silver ETF or probably platinum ETF, copper, zinc, aluminum, whatever it is. So if you feel that there is an active market for many of them or any of them, more than happy if you can voice the suggestions through Vikas, we are happy to look into it. It should not be just a statement that it will do good. There will be lot of interest, there will be lot of volumes. They are motherhood statements. There should be some data associated with it which will help us to go behind people, search for people, bring them to a table, make them discuss, find the actualities, what problems lie, where they lie, what is the regulatory representation we need to make if there is a regulatory requirement of representation. If not, how do we simply go ahead and implement, what platform, how to popularize, how to get into the investors, all that we can do. But the request should not be a motherhood statement that there will be lot of demand. It has to say why, where, when, how, who. If you do that, then it becomes easier to take it forward. And we are more than happy to do it.
Sure. Now I told you, now, whenever we used to go to him, A lot of homework is required before you approach him. So you can't make blanket statements in front of him. So I hope I can help you in that thing. Sir, we would like to close this formal interaction, and definitely we like you to be here for some informal interactions also, right?
Thank you so much, Vikas, and thanks everybody for patient listening. I hope I could serve in the next few years whatever I can, the purpose for which me joining a BSE, if I could fulfill, and if it could help BSE become a vibrant exchange, or rather more vibrant exchange, and if I could be a small spoke in the wheel where I was able to take it forward in ensuring India has multiple vibrant venues, I think I have done my job for the day. That's what I would think about. Thank you so much, and request all your support. Go and ask your brokers to provide BSE on all the segments in which they are members, in all the screens, to all the people who deal with them. Thank you so much.
Thank you. Thank you, sir. Really pleasure to have you. Thank you so much.